A laundromat listing says the washers produce $55,000 a month. Most customers pay cash, the books are thin, and the seller says the store is too busy for perfect records. Do you trust the spreadsheet? Not yet. Ask the water bill to tell its version of the story. This is not a trick where one utility number magically proves revenue. It is a reconciliation. Start with at least 12 months of actual water bills. 2 years is better because one hot summer, one leak, or one unusual month should not decide what you pay for a business. Use gallons, not just dollars. Water and sewer rates can change even when customer volume does not. Then build an equipment list. Every washer, its model, capacity, vend price, and the manufacturer's gallons per cycle. A 20-pound front loader and an older top loader should not share one invented average. Now remove water that did not produce a paid wash. Toilets, mop sinks, employee use, leaks, and any wash-dry-fold process still affect the meter. You will not know that baseline perfectly, so calculate a range instead of pretending you have a precise answer. Here is a hypothetical example. The store used 190,000 gallons in an average month. After a 12,000-gallon baseline, about 178,000 gallons remain for washers. The machine mix suggests between 23 and 28 gallons per paid cycle.
Divide the washer gallons by that range. You get roughly 6,357 to 7,739 wash cycles for the month.
If the weighted vend price is $5, the water supports roughly $31,800 to $38,700 of washer revenue. The seller claimed $55,000. That does not automatically mean fraud. Maybe the baseline is wrong. Maybe cycle options change water use. Maybe part of the claim includes wash-dry-fold or another service. Maybe a leak distorted the bills. But the $16,000 gap now has to be explained with records, not enthusiasm. Next, compare the revenue estimate. Compare card system reports, bank deposits, tax returns, supervised coin counts, and several unannounced visits. Look for the same seasonal pattern across water, gas, electricity, and reported sales. Dryer income needs its own check because dryers do not consume water. Wash-dry-fold needs a separate labor and sales ledger because its price includes service, not only machine turns. Then test the profit, not only the revenue. Put real payroll into the model, even if the seller currently works for free. Read the lease, renewal options, common area charges, and utility responsibility. Price near-term washer and dryer replacement from the actual equipment ages. Real sales do not guarantee a good purchase. The lease must last beyond the equipment payback period. The Laundry Association says a carefully performed water analysis can come within roughly 5 to 10% of actual washer income. That is useful, but it is still a range and a cross-check. It should agree with the rest of the paper trail before you treat the seller's earnings as durable. So before you negotiate a multiple, build 2 columns. In the first, put every number the seller claims. In the second, put the independent record that supports it. If washer revenue is backed by water, payment reports, deposits, tax records, and observed traffic, you have a business to evaluate. If the columns refuse to meet, lower the offer or keep looking.